Philippine markets and the economy. In the headlines, a two-tranche fuel price hike as oil prices shoot up in the global markets. We speak to Harumi Taguchi of S&P Global Market Intelligence live from Tokyo. Philippine shares hover at two-month lows following the escalation in the Middle East conflict. Where to next? Our conversation with Nisha Alicen of DA Market Securities in a few minutes. And U.S. President Donald Trump says Israel and Iran agree to a ceasefire. Oil firms agreed to a staggered fuel price hike this week, with the first tranche implemented today. Just hours ago, Shell, Petron, Caltex, and Sea Oil have increased the prices of diesel by 2 pesos and 60 centavos per liter, gasoline by 1 peso and 75 centavos per liter, and kerosene by 2 pesos and 40 centavos. The second tranche for these firms follows on Thursday, June 26th. Meanwhile, other oil companies will implement their second tranche on Friday, June 27th. Earlier estimates had pegged total increases at nearly 4 pesos per liter for gasoline and almost 5 pesos for diesel. Meanwhile, transport groups renewed calls for the removal of the fuel excise tax and opposed fare hikes that could further burden commuters.
Parang ang gusto nga palabasin, may utang na loob tayo dahil hindi biglaan. Ang isinsya nun, parang bibitayin ka ng January, gawin nating Marso para hindi bigla. Pero isinsya nung bitay ka pa rin.
To help the transport sector, President Bongbong Marcos has ordered the release of fuel subsidies for public utility drivers, including tricycles and delivery riders. However, some drivers claim they have been left out as only consolidated operators are eligible. The government has allocated 2.3 billion pesos, which will be distributed once global oil prices hit $80 per barrel. Currently, prices hover at around $70 per barrel. Meanwhile, a petition to raise jeepney fares by 1 peso remains pending. The LTFRB says it would not support the fare hike for now, citing other programs in progress.
Alam naman natin at by within this week or next week, tataas naman ho to. Kaya kami ho ay naghanda na because we anticipate that anytime this late part of this week or early part of next week, papalo na po. So ang assumption ho namin ngayon is nandyan na po, kaya naghahanda na ho kami. So pagpatak ho ng $80 per barrel ho, nakahanda na po kami para magbigay ho ng tinatawag nating fuel subsidy.
U.S. President Donald Trump has announced that Israel and Iran agreed to a complete and total ceasefire after more than a week of exchanging missiles. In a Truth Social post at 6 a.m. Manila time, Trump said the ceasefire would take place within 12 hours. At that point, he claimed, quote, the war will be considered ended. According to Reuters, Qatar has secured Tehran's agreement to the ceasefire proposal. But Iran's foreign minister denied in a post on X that Tehran agreed to a ceasefire with Tel Aviv. The minister added a final decision to ceasefire, quote, will be made later. Trump floated the idea that the ceasefire would begin in a staged process. Iran, he said, would halt fighting upon the 12th hour and Israel upon the 24th hour. This development comes after Iran launched missiles at a U.S. base in Qatar, which is the largest in the Middle East. Trump received advance notice of the attack from Iran to avoid casualties. In the end, 13 of the 14 Iranian missiles had been downed. The limited attack caused global oil prices to fall. Global benchmark Brent shed over $5 or 7% to close at $71.48 a barrel. West Texas Intermediate also declined by $5 to end the session at $68.51 a barrel. And the Dubai crude slid by nearly 2% to close at $69.88 a barrel. Oil futures continue to fall to their lowest levels since the Israel-Iran conflict erupted over a week ago. Brent is currently sitting at $68.38 a barrel, down 3%. And West Texas settles at $66.28 a barrel, down 3.25%. Now, we in the Philippines import almost all our oil requirements, all of them paid in US dollars and or foreign currencies. So that means our oil import bill gets a big bump up when crude prices rise and the peso weakens. Crude was hovering at 4.5-month highs on the NYMEX before falling 7% overnight. And global crude oil prices declined to new lows in nearly 2 weeks. But they're still among the highest in 2.5 months, or since April 4th. Meanwhile, the US dollar peso exchange rate is now near 3-month highs at around 57.58. So how much oil do we consume? We gobble up about 500,000 barrels of oil per day. Now that's worth more than $35 million per month. That comes up to about 15 million barrels, worth about 1.1 billion US dollars. And for a full year, that's about 180 million barrels, or about 13 billion US dollars. As Mike Ricafort of RCBC tells us, for every $10 increase in world crude oil, the Philippines import bill would rise by $5 million more per day, or $150 million per month, and about $1.8 billion per year. As it was, global crude oil had already gone up by about 12%, and the dollar peso went up by about 3% since June 13th when the Israel-Iran conflict started. Thus, the pass on that fuel companies now have to effect in today's fuel price hike. With us now live from Tokyo is Harumi Taguchi, the principal economist at S&P Global Market Intelligence. Ohayo gozaimasu, Harumi-san. Welcome to the program.
Good morning.
So you've projected inflation to moderate in line with an improvement in crop yields in the second half of this year here in the Philippines. But what now? With crude oil on a volatile path here following the escalations and de-escalations that we've seen in the Middle East over the past 48 hours.
Yes, as previously we anticipated oil prices to decline below $60 per barrel in the second half of this year, and the CPI is moderated to 1.1% in July, and this was anticipated gradually increase due to the waning of the base effect from the high rice prices last year. But still, we expected the CPI was remain below 2% in the second half, and the annual average inflation of this year was forecasted at 1.7%. However, the recent development seems to be increased, coupled with the weak peso, more likely to elevate the CPI inflation.
Interesting dynamics we're seeing, Harumi-san, because there is oil prices on the one hand and rice prices on the other. So given these two variables, if you will, how do you think that inflation projection is going to change in the second half?
Well, the situation is still uncertain, but assuming the oil prices stay around the current $75 per barrel and the peso remains at the current level through this end of the year, and then we expect the average CPI inflation of this the second half of this year with the average approximately 2.2% and the annual inflation also will be raised to 2%. It really depends on the situation of the oil prices. Also, this depends on the food crops.
Yeah, there's just so much variables there that we can't pin it out. But what we're really interested in is the impact on consumer spending, because there's a significant weight of food and energy in household spending. So given your projections in food and energy prices, what impact might these have on private consumption here in the Philippines?
For now, food and energy prices are unlikely to significantly impact private consumption, given that the wage increase is still solid, and then the remittances is still not affected by the geopolitical situations. However, if this the adverse weather as it disrupted crop yields and also the oil energy prices against the surge further due to the prolonged closure of the Strait of Hormuz, or this escalated the situation could again to affect the energy prices and the electricity bills, and so that probably gradually has weighted on the private consumption.
Well, I spoke with the Bangko Sentral governor himself, Eli Remolona, last Friday on this program, and he said $100 a barrel is the biggest risk. What is that going to mean for monetary policy outlook if we take a look at the worst case scenario?
Yeah, if the oil price is moving up over the $100 per barrel, and this persists, this inflation rate probably going up to more than 4% in the first half of next year. That means that in that such scenario, BSP is more likely to consider to raise this policy rate.
So where does that put now the global trade tensions that we worried about at the start of this year as a risk to the Philippine economy? Trump's tariff pause still ends in less than 2 weeks on July 9th.
We currently assume the country level, the tariffs will be staying 10% for the time being, because many U.S. trading partners still negotiating with the U.S. And also the rules by the Court of International Trade is invalid the tariffs, because it's stating that the president is misusing the international economic power, the act. That means also increase the potential to hold at the current level for time being. But there's a couple of scenarios afterwards, since if the court admits the Trump administration's appeal, then the reciprocal tariffs could be introduced as he originally announced, or the negotiation would be success and then going to be agreed to 10%, staying on 10% with some condition, or agreement with this between 10% and then originally announced. Otherwise, if the policy dismissed the Trump administration's appeals, that probably the administration needs to suspend this 10% tariff. But even so, the production level tariff is imposed by the Section 232 regulation will still remain at the place. And also another additional tax will be scheduled to including that of the semiconductors. So direct impact of this tariffs on the Philippine economy are relatively smaller than many APEC economies, since we estimate the additional tariff costs caused by 70% of the reciprocal tax is to be 0.4% of the GDP, which is smaller than many other countries. And the magnitude of impact, including the indirect impact, depends on the scenarios. And in any case, this trade type of the tariff will slow global economic growth and disrupt the supply chain.
All right. Well, it's good to hear a silver lining there despite what's going on globally. Thank you so much for joining us for the insights, Harumi Taguchi of S&P Global Intelligence. We will continue our discussion on the effects of the Middle East conflict after this break. Nisha Alicer of DA Market Securities weigh in on Philippine shares reaching a 2-month low. And Meralco's Empower expands its power supply deal with the Gokongwei Group. Keep it here on One News.
Lahat po ng mapapanood ninyo sa susunod na mga eksena ay fake. Tandaan nyo po yan.
Ngayon, sobrang dali na gumawa ng fake na video. Muka, boses, pwedeng gayahin. Parang totoo, pero hindi.
Yung fake videos, pwedeng gamitin yan para manghingi ng OTP, password, o mag-spread ng maling impormasyon. Gaya nito.
Bro, legit to. High return in just 3 months. Wala kang gagawin.
Oo, boss. Bayad ka. Minimum lang 50,000. May 100,000 ka na bukas.
Oops, fake lahat to. Pati kami FAK.
Nanalo ako. Pero kailangan daw ng 1,000 pesos. Tsaka OTP. Anong OTP?
Inday, na-aksidente si sir. Nasa ospital. Karon dayon nagpadala og kwarta.
Ha? Unsa? Ay, fake pala ako. Pati itong buong eksena.
Good morning po. May promo tayo ngayon. Tataasan natin ang credit limit ninyo.
Alright.
Pakisend po ng picture ng credit card nyo.
Oops. Fake to.
Ingat tayong lahat sa fake.
Welcome back to Money Talks. I'm Cathy Yang. U.S. stocks climbed Monday, hours after Iran launched a limited attack on American base in Qatar. The Dow rose by nearly 0.9%. Both the S&P and the Nasdaq were up by 0.9% each. Benchmark 10-year Treasury yields fell on Monday's session to 4.321%. And gold prices ticked up to $3,377 per troy ounce. Stock futures gained in after-hours trading, pointing to a rise when the markets open later tonight, Manila time. Both the Dow and the S&P are up 0.4%, and the Nasdaq rises by 0.7%. Asian markets are the first to open after Trump announced the Israel-Iran ceasefire. Right now, the indices are trading higher. Australia's ASX 200 is up by over 1%. South Korea's Kospi rises by over 2.25%. And Japan's Nikkei 225 climbs by nearly 1%. Let's take a look at our own markets here in the Philippines and check out the Philippine Stock Exchange Index. It opens Tuesday higher by 0.6%. That's 6,259. Philippine shares Monday tumbled to a near 2%, sinking to their lowest level in nearly 2 months since finishing at 6,100 on April 24. The broader All Shares Index went down by over 1.4%. All sectoral indexes were in the red, led by mining and oil. Let's take a look at the Philippine peso. Opens today stronger, 57.20 to the dollar. Peso closed yesterday weaker at 57.58 against the greenback. With us now for more is Nisha Alicer, Chief Equity Strategist at DA Market Securities. Good to have you back, Nisha. Welcome back to the program.
Hi, Cathy. Thank you for having me.
Yeah, how things have changed since the last time we talked. I mean, it was all Trump tariffs coming down upon risk appetites, and now we're seeing a rally in both the peso and the PSEI. What do you make of that reaction in just 48 hours? A big change there in risk appetites.
Well, definitely seeing volatility in the markets. And I mean, the PSEI still hasn't really budged so much for the year. But I would say that an interesting catalyst that the market is facing is the CIMEPA passing and the effectivity on July 1. So that lowers stock transaction from 0.60 to 0.10 for sales tax. And so I think that's one thing that could keep markets optimistic moving forward. Aside from that, though,
Nisha, because that's been pretty much talked about, and it's coming to be at a time we need that kind of support. What kind of an impact then in capital market development on and also on retail investors?
It's really been something that people have been looking at to make the Philippines more competitive regionally. And so it brings us really to the average of the market, of the peers. And at the same time, you know, the Philippines is at very low valuations, very interesting, attractive valuations. And so I think that it does come at a good time. We just have to worry about certain risks in oil and pressure on peso.
I know. Let's take up oil as a risk. I mean, that big fuel price hike happening in two phases this week. What impact is that going to have on one, consumer prices, and next on the consumer-linked stocks in the market?
Sure. Well, higher oil prices, should they emerge again in a very volatile environment that we have today, could affect transport, food, logistics, and this definitely dampens the ability of consumer to be able to have confidence to spend. In a consumer-driven economy, this is definitely a big factor to consider when investing in the stock market. If oil prices also go higher, it puts a pressure on the peso, and therefore, you know, we can start thinking about widening trade deficit and again, higher costs in general. So it would definitely dampen consumer sentiment.
But pressure on the peso as against dollar weakness. I mean, it's really been a dollar weakness story in the first half. Is that narrative going to change? And what would that mean for the peso, if indeed the peso will weaken against the dollar?
Compared to the region, the peso is still a little bit weaker, and I think it's really a mix of different things like policy and fundamental drivers in the economy. However, we do think that it isn't that weak. It's just up. It's just down by 2.2 to 3%. And so it isn't so much of a concern today. So when we do our estimates, we really try to kind of factor in more risk, and just to provide for the volatility that we've seen this year.
What has that volatility meant for the overseas Filipino workers who remit money and who would benefit from a weaker peso?
Well, it's definitely an interesting mix for the Philippines. We have to have like a very good balance. So we have tariffs that might be effective in by July 9, but then we're also negotiating to bring that down. Now, if tariffs do become effective, when the tariffs do become effective, that could put a pressure on weak peso also. I think what it's done for the Philippine economy is that it's really supported a consumption-led economy. And so if we're able to manage that dynamic, then that would be interesting. At the same time, we also have to contend with inflation, peso, and interest rate hikes. Interest rate cuts. So we are in the direction of rate cutting. I believe that the estimates are going to be that we can go down by another 50 bips. But if inflation threatens that, and also if oil prices can become volatile on the upside again, then that could be at risk.
How much of a risk then if we input tariffs? I mean, there's a lot of uncertainty there. There's a negotiation going on, and the ending of the tariff pause on July 9th. How does it sit now in the order of risks, and how should investors prepare?
So the tariffs are applicable to electronics, to food, but there are exemptions to the high-value electronics sector. We do think that if we're looking at the market, if we're looking at investment flow, the Philippines is still has an advantage because our tariffs are still lower than the region. So that plus the lowering of the stock transaction tax actually bodes well for the Philippines, especially at a time when we have very attractive valuations in the market. We just have to manage our inflation, interest rate, and the peso.
What about that interest rate differential? I've spoken with Eli Remolona, the governor, last Friday, and he made a mention of being comfortable with at least 50 bips interest rate differential. What impact might that have on his ability to accommodate what you think might be a 50 basis point rate cut down the line this year?
Governor Remolona has spoken about oil-driven inflation, and so I think he would stick to that in terms of being able to decide on the next possible cuts.
It's really going to be oil as the main and key mover here, and also the deal breaker, if you will. Where are we now on the conversations on sustainable or renewable energy for the companies there that have latched on to this kind of a themed investment, and how investors are responding to it with oil prices on the rise again?
So we're definitely more positive about the sustainable assets or issues in the market. So obviously we have energy, which are going to be the biggest drivers of cutting emissions. We've got solar companies like ASEN, First Gen, that's pioneering geothermal. ASEN has already declared that they're going fully renewable. SPNEC under Meralco is building one of Southeast Asia's largest solar farms. Meralco is investing in solar and batteries. So that's pushing ahead, and this volatility in oil is actually supporting that direction, that choice. Of course, in the medium term, we are dependent on oil to be able to build that infrastructure. But I believe that if you're taking a look at the market in a longer term outlook, then your best bet is renewables.
Well, renewables back in vogue again with the volatility we're seeing in crude oil globally. Thank you, Nisha Alicer, for your insights. Much appreciated. DA Market Securities.
Thank you so much, Cathy.
And remittance inflows to the Philippines could fall by 1.4% if U.S. President Trump's proposed tax on money sent home by foreign workers is implemented. That's according to Deutsche Bank research, which says the impact could shave off 0.1% from the economy if his tax bill becomes law. The bill includes a 3.5% excise tax on remittances from foreign workers in the U.S., but exempts U.S. citizens and nationals. Deutsche Bank says the effect of the tax may be short-lived, but the long-term shifts could slow remittance growth more significantly. The bill passed in the U.S. House in May and is now under Senate deliberation. In corporate news, Empower has renewed and expanded its power supply deal with the Gokongwei Group, strengthening a partnership that began in 2013. Under the new contract, Empower, a local power retailer under Meralco, will continue supplying reliable and competitively priced electricity to key Gokongwei-led companies across Luzon. JG Summit CEO Lance Gokongwei says the agreement supports their shift to 60% renewable energy as part of efforts to reduce environmental impact. For his part, Meralco Chairman Manuel V. Pangilinan calls the partnership a shared commitment to innovation, sustainability, and nation building. Note, Meralco and Signal, the owner of this channel, are both part of the MVP Group. Headlines from around the globe. In France, police detained 12 people for allegedly pricking syringes on 145 individuals during Fête de la Musique celebrations. The attacks took place on Saturday across the country, with authorities confirming at least 13 cases occurring in Paris. Investigation is ongoing whether cases of needle spiking involve date rape drugs, which leave individuals disoriented and unconscious. Millions of people took to the streets over the weekend for France's annual music festival. In Greece, authorities are battling a series of wildfires on the island of Chios. They look into arson as the cause of the blaze. Fire broke out in 3 areas, with strong winds exacerbating the situation. Over 190 firefighters were deployed to the island, with another 170 expected to arrive this week. Chios is one of the largest islands in the Aegean Sea that sees an influx of visitors during the summer season. And Chile's Ferris E. Rubin Observatory has captured over 2,000 previously unknown asteroids in merely 10 hours of observation. The observatory's initial photograph showed a celestial object within the Virgo galaxy cluster, the glowing Trifid and Lagoon nebulae, and millions of stars and asteroids. Some experts are hopeful the observatory could capture an image that would turn out to be the solar system's Planet 9. The observatory is equipped with an advanced 8.4-meter telescope and backed by powerful data processing systems. And before we go, PLDT has bagged the Social Infrastructure Deal of the Year at the Asset Magazine's AAA Sustainable Infrastructure Awards 2025. The recognition was for PLDT's 2 billion pesos social loan from HSBC Philippines, which helped expand its fiber optic network to undeserved towns, including remote and disadvantaged areas. PLDT Chief Finance Officer Danny Yu says the award affirms the company's sustainability focus and commitment to bridging the digital divide. The AAA awards honor institutions that drive sustainable infrastructure and economic development across Asia based on their 2024 performance. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.
Sana all.